Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and welcome to the daily analytical report with Alpari. Let's start with the economic calendar, where calendar is rather empty. As you can see, well, Christmas time, right? Christmas are coming, so as we said, liquidity will be lower, volatility will be lower in the same time, and now we're just awaiting the end of the year. Not much data in the calendar. We will have important data for oil traders, but for the forex traders, calendar is empty. When I'm preparing for this daily analytical report, I read many analysis reports on different portals, and today I'm reading about Italian problems, about fears about Italian banks, Spanish banks, German banks, etc., and that European indexes are declining because of those fears. That's very interesting because when I open DAX, a chart of for DAX, I cannot see those fears. Today we got new highs on German index. Yesterday I was telling you about the possibility of an upswing, and that's actually what happened. So this scenario is on the table right now. Why I was telling you that there is a possibility of an upswing was that ascending triangle. Ascending triangle in upswing shows the rising pressure on the support, on the resistance. This resistance was here, labeled with a green color. And actually yesterday we got a breakout after our webinar. We got a breakout, then principle of price action trading, so broken resistance becomes a support. That happened early in the morning, and now we early morning started with an upswing, and now we have a continuation of this movement. Maybe a small correction, but this is 200 points correction, so for DAX it's really nothing. The price is still making higher highs and higher lows. This is just Santa rally, as we missed that a few years ago. Usually on December stocks are going up. That's what's happening this year. So stocks are having very good December. That will definitely help the statistics for stocks rallies in December over years. So here the uptrend is not paused, is not stopped. It goes on. Short-term positive scenario will be denied once we will break this blue line and this horizontal support, but long-term buy signal is still on and will be on, even if the price will get, for example, here or even below that support here. We just cannot argue with the bullish power which we can now see on stocks. Oil is heading higher. So yesterday on our daily analytical report we had a small correction, but after that the price advanced higher, then a small correction, but now we are advancing higher again. We made another higher high. When you compare the price to yesterday and day before and day before and last Thursday. Yes, Thursday, 15th of December. So every day we're having higher highs and higher lows, which shows how healthy is the mid-term and short-term bullish sentiment on oil. We were telling about that many times on Trading Sniper, our short market review, on Daily Analytical report, and on our Twitter account, that there's an inverted head and shoulder formation. There was a trend continuation pattern, and after breakout, the price should go up, and it's going up. When we have this knowledge, here we have this situation here. We have to be aware of this data, which will be published in 3 hours 20 minutes, because for today it will be the most important news that we will get. Okay, that's the oil market, that's stocks. Let's focus on currencies right now. Maybe if we had commodities like oil, let me start with silver, because on silver there is an interesting situation that I just made a video on a Trading Sniper about. What's interesting in the silver chart is not this channel here that I'm drawing, but what's interesting is yesterday daily candlestick. Yesterday daily candlestick is a hammer, beautiful hammer here. Usually there's nothing special about hammer, right? At least there shouldn't be nothing special about hammer, but this hammer is unique. Why is that? Well, not unique, but very, very strong. Why is that? Because it happens after a strong decline. Also, it happens on the lower line of this channel. Also happens on a horizontal support here. Is this horizontal support relevant? Yes, it is. It was resistance in February, March. After a breakout, it was a support here in April. It was a support at the end of May, at the beginning of June. And now the price went here, tested this level, low price of silver got rejected, which helped to draw a hammer daily candlestick. It seems that when you go on hourly chart, that this was just a false breakout, that this is a double bottom formation here. Okay, double bottom formation. Well, yes, we can insert, for example, MACD to make sure, but yes, I was more than certain that there will be a divergence. So when you go on MACD histogram, here you have a divergence. Maybe let's check another one. Which one do you want? Maybe RSI is popular. Yes, there is a divergence as well here. So we're having a buy signal from the technical analysis, but obviously it's going against the trend. There's always a high risk that you will get a stop loss here. It's just how it is with trend reversal patterns. Here, obviously, the trend is negative. Buying here means that you're going against the trend, and remember that it's always less probable to earn money when going against the trend. But still, the signal is strong, right? Especially defending this horizontal support, which is pretty clear, I would say, right? I don't have to convince you that there is a horizontal support here, do I? So yeah, that's what we are seeing here on silver. Is the situation on gold also so optimistic? I wouldn't say so. I wouldn't say so. It's again this situation that silver is much stronger than gold. It goes on for a few months. We're having still trend continuation patterns. that there was a kind of pennant or a flag. It doesn't really matter. What matters is that we broke the lower line of this formation and we went lower. Now we are bouncing from this support. Why this area is labeled with yellow color? You will see that on a weekly chart, because there is this long-term uptrend line here. There is this mid-term downtrend line here. They cross on $1,100 per ounce, so this is an area for a potential bounce. But I'm not so convinced that it will happen exactly on the top of this area, because it's I just draw a rectangle here, so it can be even like that. So it's not relevant at all. This rectangle, what is relevant is $1,100 per ounce area around this level, which can be used as a support. So far, we do have a buy signal on silver. We do not have a buy signal on gold. Buy signal on gold will be triggered once the price will break this upper blue line, also this red midterm downtrend line, and it will happen. If it will happen, buy signal will be created here, not here, not here, not here, but here. So to this, now we are having 1,135. Here is 1,150, let's say. So we still have $15 to the level of a potential buy signal. Euro dollar. Euro dollar is also having a double bottom formation. Let's check if it's already buy signal. No, it's not. Only the thing that there's a double bottom formation, probably with a divergence as well. Yes, there is a divergence. It's not a buy signal itself. It would be too early to go long here. What you need to break is this red line, as on silver. Right? As on silver, we had a breakout of this resistance and the price can go up. Here we do not have a breakout so far, so don't go long. So obviously I cannot advise you what you should do. I cannot recommend you anything. I'm just telling you how the situation looks from the technical point of view. There is also a nice bounce on cable, which is trading very technically lately. So we broke the lower line of the flag, then there was a bounce, and got to the lower line of the flag, but tested this level as a resistance for the first time. Reaction was as price action says it should be. Now the price is testing horizontal support here. It's not a coincidence that we bounced exactly here. Look, that was a resistance here, here. After the breakout, it was a support here. It was tested once, it is tested twice, and we can see maybe not a double bottom formation, but maybe an inverted head and shoulder formation, right? Let me draw a neckline here, and on cable, signal is active. This is a short-term buy signal. Again, remember, it's going against the trend. It's very risky, but I can see a potential for an upswing, at least for 40 pips. So for short-term traders, that's kind of alright. Maybe there's a potential for going here 150 pips. So we can see that Wednesday brings us global retracement from dollar. It's nothing serious. Trend moves like that. There's a downswing, upswing, downswing, upswing, higher highs, higher lows, lower highs, lower lows. Uh, why not? Why not? Especially that it looks very technically on many instruments this retracement from the dollar. So it can be a proper start for a global correction of the value of American dollar. Why not to use it? Why not to use it, especially if it looks good from the technical point of view? It's not just an opinion, just an idea, but if you read charts carefully, you can see many trading signals, many trading factors that are telling us that we can get a retracement on dollar. Not a long-term trend change, not a mid-term trend switch, but for now it looks like a short-term reversal. You won't earn 1000 pips from that, even 500 or 200, but those movements look like they have a potential for 100, 200 pips. Australian dollar to American dollar. After 1 to 4 bearish days in a row, we were thinking that we're gonna have a fifth yesterday, but the price retraced. There is a time for correction. So we are thinking that the correction will happen later, but fair enough. It can happen now, and this is the scenario that we are expecting. Also inverted head and shoulder formation, but the neckline is not crossed yet. Where is the closest resistance? Obviously here. Why is that? Because broken support becomes a resistance. Was that a support? Yes, it was. Okay, so movement here will be purely technical and no one should be surprised, because it's just how the market works. American dollar to Swiss franc. Remember those three, the same corrections were more or less. Those were 130, that one was 126. But we got a nice upswing here, 100 pips, and now we're having a reversal. So maybe this support will be, this green support will be tested again. American dollar to Canadian dollar. Here not much is happening right now. For sure this pair will be influenced by the data from the oil market today, because Canadian dollar is oil sensitive. This is a commodity currency, so when the oil price goes higher, Canadian dollar is stronger. When the oil price goes lower, Canadian dollar is weaker. And now the oil price is much higher, but we could see a small retracement from the value of Canadian dollar, obviously influenced by the Fed's hawkish dots. So this pair is influenced by oil, but all instruments on the forex market are more influenced by the Fed than the oil market. Euro to British pound, what we're having here, still locked in a side trend above important horizontal support. We are still waiting for a breakout here, which is not coming, but it's not tradable at the moment, right? Because it can go the other way. The odds for a bullish breakout are more or less the same as for the bearish breakout. This setup is tradable for side trend traders, which go from they sell on the resistance, they buy on the support. I'm not this kind of a trader. I like to go with the trend. I do not like to go with the opposite movements. I'm more like a breakout guy, which breakouts which start new trends or start or continue old trends which were present before the correction. So in my opinion, it would be better to wait here for a breakout and trade with the breakout. Australian dollar to Canadian dollar here. Still waiting. Maybe we'll have a upswing here, aiming the closest resistance, which was a support for a long time, and from this downswing. This movement would be very, very nice from the technical point of view. Euro to Australian dollar here, also a side trend. Here also we wait. The odds for a bearish breakout are slightly bigger because we are below important supports. We are also in a downtrend. The price is making lower lows and lower highs. So the odds for a bearish breakout are higher, especially if we are in a rectangle, and rectangle is a trend continuation pattern. So if the trend is negative here, and it should be continued as the price action is telling us, the odds for a bearish breakout are higher. We had a false breakout here. Unfortunately, you know that we had a position there, but we opened this a little bit earlier, so we were already on nice profit. That is why we moved our stop loss order to break-even point, so we didn't lose money on it. We earned, I think, $10 or something. So nothing, but we didn't lose money. We closed that position on break-even, like it wasn't even there. We are waiting for the situation to develop. Personally, I think we should see a breakout here, and I will be there on the market once it will happen. American dollar to Japanese yen. As you can see, this line is spooking the traders here. Is this line important? Well, in my opinion, yes, it is. It is important because it's the resistance here, right? The resistance from May, where it all started in May 2015, all that correction, and we're aiming this level. We're not so far from it, and I can see that traders do feel a bit of respect. Here it's 80 pips, not so much. We had a bullish breakout from this flag, which is now being denied. So actually this is just a false breakout here. The price is aiming lower, and with this kind of price action and with this false breakout here, I wouldn't be a surprise if I would see a test of the recent support. That's 100 pips. 100 pips movement potential. New Zealand dollar to American dollar. Here also we are thinking about 5 bearish days in a row, and that's what happened actually. But we cannot call this a successful day for sellers because there is a hammer. Hammer is not so important as on silver. Why is that? Because it's not happening on an important support. It just happened. But when we go get a closer look, you know this green area, strong support. I don't have to convince you. It was a support in June, twice in July. It was a support in November as well. And again, principle of price action trading, broken support becomes a resistance, tested, test successful, 40 pips, and now maybe we're gonna test it for the second time, who knows. But the odds for a bounce here, so for a successful defense for sellers, the odds for that are higher, because that's how the trend is bearish, and that's how price should behave, at least from the price action point of view. The last instrument which I have for you today is Euro to Canadian dollar, also mentioned on our Trading Sniper video, which is already posted on our Twitter account. I advise you to look at our Twitter account. Bunch of useful information for traders, trading occasions, setups, analysis, articles, everything what you need to know and would like to know and is useful for trading. But let me come back to euro to Canadian dollar. Left shoulder header and right shoulder, important support, horizontal support, also being a neckline here, also 50% Fibonacci. We got a breakout, so which creates a sell signal. After the breakout, what we are having here is a wedge, or maybe a flag, it doesn't really matter, or maybe a pennant. But as we all know, what matters is in trend continuation pattern, when it happens in a downtrend, what really matters is the breakout of the lower line. In uptrends, what it matters is breakout of an upper line because it triggers the buy signal. In downtrends, what matters is the breakout of the lower line of this formation, which triggers a sell signal. Also, here, maybe horizontal support here, breaking this lower line of the pennant, and the horizontal support here should trigger sell signal. Okay, so far we are exactly in the middle of this formation. So again, this is a side trend. This is not tradable for me, as I like to follow trends. I like to catch big movements. I don't like price being stuck between support and resistance. So what I'm waiting here for is a breakout here. What is the potential target for this formation? I would say that they will try to touch the trend line here, also make to the same corrections. So I would say that from now, what I'm seeing here, maybe from the breakout, not from now because now it's not tradable, but from the breakout, I'm seeing here 360 pips movement, which you have to admit is pretty nice. Especially that opening position here with a stop loss, for example, for 100 pips and aiming for 360 pips give you an excellent risk to reward ratio trade. 3 to 1, potential profit is 3 times bigger than potential loss. I would say that every trader is dreaming about this kind of risk to reward ratio. Most of the traders, they go for 1 to 1 or something, and then later they are surprised why they are not making money on the market. You should always aim for a good risk to reward ratio trades, and this is one of them. At least it has a potential to become one of them. Okay guys, I hope you enjoyed daily analytical report. Market is quiet, but thanks to that is moving very technically. So as you can see, we can spot loads of occasions for traders. And I hope it will all work out. Obviously, it's not only my hope that is supporting this view, but also our live trading accounts, our trading systems, which are bringing profits, our trading strategies, our view, our approach to the market. In the long term, it brings profits. So that what is supporting my view here on those instruments. Thanks guys, remember to follow us on Twitter, remember to visit alpari.news for the latest publications. Stay safe on the market and see you tomorrow.